Alright, dates first, then impact. October 30th, 2025. Netflix announces a 10-for-1 forward stock split. November 10th, the record date. If I held shares by market close that day, I'd receive 9 additional shares for each one I owned. November 17th, the split-adjusted shares start trading. Now for the impact. A stock split slices the pie into more pieces, but the pie stays the same size. If I had one Netflix share at about $1,100 pre-split, I'd now have 10 shares at roughly $110 each. That's why you'll see the price per share drop, but my ownership value doesn't magically grow. Here's a quick snapshot of today's trading data. Ticker, NFLX. Last price, $109.29, up 171 Intraday high, $109.32. Intraday low, $106.06. Volume, 13,875,349. Latest trade time, Monday, December 1st, 2:37 p.m. CST. So why do companies do this? Accessibility. A $1,100 price tag can scare off smaller investors. Liquidity. More shares at a lower price can mean more trading and tighter spreads. Employee stock options. Easier to grant and exercise at a lower per-share price. But remember, revenue, profits, strategy, none of that changes just because of a split. It's cosmetic, not fundamental. Historically, Netflix has done this before. A 2-for-1 split in 2004, a 7-for-1 in July 2015, and now the 10-for-1 in 2025, the third split since its IPO. What it means for me as an investor. The number of shares I own might jump 10x, but my total value stays the same at the moment of the split. More retail interest can show up after a split, which sometimes boosts demand, but that's not guaranteed. I always come back to fundamentals: subscriber growth, pricing power, content spend, margins, and competition. Let's connect the dots with today's price action. Trading around $109 aligns with that 10-for-1 math from pre-split levels above $1,100. We've got a tight intraday range and healthy volume, showing active participation at the new price tier. In conclusion, a stock split is a reset of the sticker price, not the company. If I'm long-term, I'm watching Netflix's execution. Content that converts, churn that drops, and margins that widen, not just the number of shares in my brokerage app. So, celebrate the accessibility if it helps me build a position, but I'll let the business drive my conviction. If this helped, hit like, and tell me if stock splits make you more likely to buy, or if you wait for the fundamentals to do the talking.